Welcome to Trading Lounge and the European Indices. We're starting with the DAX here. This is on the weekly chart. Excuse my voice, I've just picked up a bit of a fluey, buggy thing or whatever it is. Bigger picture. This is a weekly chart for the DAX. And we're looking at wave 3 here, primary degree, and wave 4, primary degree. And we're looking for wave 5 to the upside here. And within all of that, we're looking at wave 1, wave 2, and then we're in wave 3 here. So within wave 3, we're looking at 5 waves of 1 and 2 and 3 and 4 and 5. And this is also where we think that the S&P 500 is at the moment too, basically the same count as what I'm looking at here. So this will transfer through to most other markets as well if you're sort of curious about them. So this, obviously, there is risk at buying on lows here, but the money's in the turn, and this is really where it needs to be done if you haven't already done it. So let's just move into the daily chart, then 4-hour chart. So the daily chart, we've got the A, the B, and the C here. And now we're looking at this being wave 1 here and back for wave 2 here. And then pushing up, into 1, 2, 3, 4, 5 for the 5th of the 3rd here. And this would also be a classic trading levels pattern too. So across the level here, we would see, as it is here, well, I can use this, we can see the arrival here, the reaction in 3, and then the first high above the level in 5 waves here. So that would be that move up here, and then we would see the larger correction unfold here. So that's the classic trading levels pattern. And look, it works most times, and there's a slight variation on it. It works with the Elliott count as well. So it's always a good thing to, if you're getting the basics together, the structure together of something, it's good to sort of like consider, the classic trading levels pattern and the 2 variations on that. And of course there's the overshoot pattern as well. There's not a lot that can actually happen at a level at a Fibonacci number, so to speak, or the medium levels, but still, anyway, that's the picture of where we are. So let's just go into the 4-hour chart and pick up this low here. So the 4-hour chart here, we've got wave 4 here, and as you know, we're looking for wave 1 here and wave 2 here. And this move up here is also an impulse wave as well. We expect the 3rd wave to be the longest and the strongest, so we're looking for 5 waves in that. And it does appear that we're quite close to the top of the first wave here as such. So the other point here that I want to make as well is that with the trading levels, we've got 12,000. Then from 12,000, we've got group 1, which is 100, 200, and 300. If we get support on top of this 300, then that really cements it to the upside. So support normally takes a little bit of an effort as well. So let's just sort of draw this out here. We're looking for a little move, say, above the high here, and then a corrective move here back. So up for 1, back for 2. So really this becomes a very vital trigger point when it comes in that top there. Then of course we can bring it down through here as well, and then we can also study the ABC correction within here as well, and even try and get a lower price in here as well. But this is the place to build in. This is kind of safe here too, because if I've made a mistake, let's say that this is an A wave, a B wave, and a C wave here in 5 waves finishing here, then it would just move straight down from that point. So using this kind of thing here, allowing you might be long already and that's fine, allowing the first 5 waves to finish and then come back. Let's just pick it up on the hourly chart here. So looking at wave 4 over here, wave 1, wave 2 here, and then wave 1 up here. And then if I can draw this here, let's just take that straight up to these old highs here. And of course these other, it hasn't sat on support here for a while, has it? Do you know what I mean? So that's something that needs to be achieved along the way for this market to get up into this space. So it's something that you could actually work with. The move up here. If I can just draw that here, let's just take it to the old highs here for the time being, okay? Then we'd be looking at a 50-60% retracement level, which would bring us down into this space here. Let's just get rid of that. So it may not pull all the way back down here as the ABC pattern here, right? There's a couple of things that I want to point out here. It is possible, so it's possible for it to, move up to there, move back to here, and then, move on up this way. And this pattern will be in 3 waves. It'll be very important for us to track these 3 waves here. The other thing that I wanted to point out here is that understanding the levels is really quite important, because it's kind of rare that when a market is moving up here, trying to develop support on 300 here, normally it would come back just to the 2 here. So I'm just going to copy that text there and also put that there as well. So what I'm saying, it might just come back to the 2 here, the 200, and then go off there. So if you can work an ABC pattern, an A and a B and a C pattern into the 200 there, then that will be sufficient at that point. If you're long already and you want to accommodate this pullback here, then of course you'd need to leave your stop under here. So you either take profit here and then work the trade back in over here. Yeah, let's just go into the tick chart here. So this is just roughly what I was thinking here. So wave C of 2 here, and then we've got wave 1 and 2 and 3 and 4, and then the extension in wave 5 here. So it's kind of important to note the extension in wave 5 here too, because this is the first wave up here. So really this little pattern here is a bit like a blueprint for what can occur further along the line in bigger structures on the way up. So all that said, yeah, I can't draw on this side on tick chart, but this has got to finish up into this 12.3 here, and then there'll be an A and a B and a C. So I'm thinking it might just come back to the 200 rather than back to this here. So this is what we got to look out for. Of course, the move down through here will be the A wave will be in 5 waves, the B wave will be in 3 waves, and the C wave will be in 5 waves as well. So wave 2 is normally a zigzag, which is 5, 3, and 5. And then the good thing about that, even if you can't follow find the count, because I'm not saying it's easy, but when you get that top in here and it comes down for the A wave, the B wave, and the C wave here, that would obviously come from this way. Then just drawing a line through there, and once this is resistance, once this becomes the support, it'll take a little bit, normally moves through like that and finds itself there and moves up. So it's a reasonable place to take it. Do you know what I mean? To move in. So just bear that in mind. Okay, I want to move on to the I'm going to go to the AEX next. The AEX has been a bit of ahead of its time because of Unilever. I won't look at Unilever today, but in this case here, originally this is the A, the B, and the C for the wave 4 here. But I could see later on that this market was moving up and the DAX and all that were moving down, so to speak. And I thought wave 4 would come in over here. I thought we would have a larger A wave, B wave, and C wave here. And I can't rule that out here, but if the DAX is going to push up, well then this is going to push up with it as well. So I think what we should do here in very simple terms is continue with the wave 4 here, view this as wave 1, an A and a B and a C back for wave 2 here at the 61.8% mark, and then moving up here rather than getting to this point here and moving down. It still could, but I think that coming through here, it could still fail from here and just move down from here. But as soon as it takes out this high here, then it's confirmed bullish, because what it does, it makes that an A and a B and a C wave here. Look, this can be counted as 5 waves, a bit rough, but it's okay. And this can be counted as an ABC back into the 61.8% mark. So really we want to try and find a long trade here. Normally we were looking at this, that if the 530 ever became the long, well then support, well, then we'll go long from there. But of course we can get in lower here. It just means higher risk all round. Let's just go, I think we're working on the hourly chart. So this is kind of the same as the DAX, same but different, just basically heading in the same direction now with the intraday moves here. But in a nutshell, I just want to point out that we can go back to our wave 4 over here, look at this as wave 1 here now, and then have this as the A, the B, and 5 waves for the C wave here. The other interesting point here is that if it was going to be bearish from here, then this move down here would be in 5 waves. Well, it is. So that means that the 61.8% is back on 5, 2, 3 here. And this is group 1 is 10, 20, and 30, 1, 2, and 3. But then we can come into the micro sub levels here of also 21, 22, and 23 here. That 1, 2, and 3. That's also group 1 again, just in fractal terms. So a tested support on top of 5, 2, 3, a tested support would also trigger the long trade as well. Now, I don't expect it to get support here straight away. This move up here will be in 5 waves, much the same as the DAX. So I think just there's a little bit more to go in the DAX, or there'll be a bit more here. But what it will do, it will fold back over and it'll give us our reference point top here as wave 1, and then we'll have the A, the B, and the C back. Wave 2 is kind of interesting, really. I'm not an options player or anything, but I know very little about it, but I do know that when you get a wave 2 here, the gearing or the leverage or the weight or whatever is the perfect time to get an option within wave 2, because they're all bailing out the other side. So give that some consideration of buying on this low down here as well for a move up. And of course we've got to look at the FTSE, and we need to drag that into the general picture as well. So with the FTSE, I had it much the same as the AEX as well. So looking at this as an A wave, and an A and a B and a C for the B wave here, and then I was looking down for this to move down in 5 waves here. And it's not to say that it can't, it's just that looking at the S&P 500 and the DAX, it's probably likely that that's not going to be the case. So the case scenario here in very simple terms is to bring that C wave up into these spaces here to have wave 4 up in here. Okay, so now of course if I may just use that here, and I mean, of course we need to know that when we're wrong we need to go short, so really going under those lows here would be the short trade. Okay, so we can just save that there now. But and that's quite, this count that I've got here is wave 1, wave 2, wave 1, wave 2 here, wave 3, 4, because it's at the 61.8. I mean, it's a little bit higher than that, but I mean, that was where we're looking at. But you know, it may be corrective to that point there, because this is 5 waves here. So yeah, so it's this can still be the case, but what I want to look at is having this as also wave C of 4 here as well, and looking at this as a bullish move to the upside here. So I'll just save that. I mean, to have a plan is important, you know. I mean, we've all been taught, you know, fail to plan or plan to fail and all that sort of stuff. But I think a plan is okay, but I still think it's quite a primitive outlook on approaching something in a scientific way, because a good scientist would look at everything. They would go, what if this, what if that, and so on. And to me, that's called planning. So yeah, I think planning is more important than having a plan as such. But I'm not a scientist, so I wouldn't know, but I do know a little bit about common sense. So and it's staring me in the face. So let's just go to the tick chart here and look at this here. So if we assume that this is going to be the same as the other markets here, and from this low here, even though this one's the low here as well, I want to take it from this point, and I've got 1 and 2 and nice 5 waves up for the third wave, the fourth wave here. I could probably work most of this out here, but I'm just expecting it to go a little bit higher like the DAX and make one more new high and then have an ABC correction here. So yeah, with the ABC correction, obviously I can't draw on this side, so I'm going to draw over here. So if we come up here for the top of wave 1, then we're looking here at 5 waves down here for the A wave, the B wave in 3 waves back up, and then the C wave down here. Normally it's quite sort of sharp, but that's the pattern that we're looking for here in A, B, C here. And of course, it may be shallow, it may be deep. If it's going to be deep, then we need to be looking at, this is where it can come to, into this space here. If we're looking at it in shallow terms here, it may not even pierce group subgroup 2. So if I just remove that for a moment and just look at the 80 here, the 80, 72, and the other one 65. Yeah, so that all fits in quite nicely at that point. And also too, once this occurs here and you're on 7.4, then you also should take on board group 1 above. So we've got 74, so 10, 20, 30, 1, 2, 3, and 50, the Fibonacci numbers, then 80, of course. Now, we can just darken this one up a little bit. So, if you get support on 7,430, that's the top of group. If you get a tested support, that's another time to add to the position as well. So really, there's a lot of, from here, once that move up here starts, there's a lot of places you can build the trade into. Just keep the stop out of the way, because this is wave 1 and 2 here. The next one will be wave 1 and 2, and then building again. But they are the places to build through. All you need to do is recognize that the move down here is in 3 waves. So 3 waves here. The simple way to do that with not having to count all the stuff is just basically draw a line through through there and take, because at that point, taking the top out at that point there makes that a 3-wave correction. But we can look at it in terms of from that high to that high being above the 61.8%. There's a lot you can do. It doesn't matter what you do, as long as you know you're doing it, so you can continue to refine it in many ways. But we're looking at buying opportunities in the market. Let's see if they come into play. Alrighty, I'll leave it at that. Cheers.